Hello everyone. Welcome to cryptocurrency mobile mining and trading. I'm Dixon, and I'm excited to have you here. After countless hours of research and testing, I'm here to bring you the most reliable, real-time updates, insights, and strategies to help you stay ahead in the world of crypto mining and trading. Let's explore opportunities, learn together, and grow our crypto knowledge and profits, all from our mobile devices. Before we dive into today's big story, if you're serious about staying informed in the crypto space, do me a quick favor. Hit that like button, subscribe to the channel, and most importantly, smash that notification bell so you never miss a critical update. Your support helps the channel grow and reach more people just like you. Now, let's get into our main topic for today. It's a story that serves as a crucial reminder for all of us in the crypto community. We're talking about a major crackdown on fraud, specifically the case of Travis Ford, the CEO of Volve Capital Crypto Trading. Just yesterday, Ford was sentenced to prison for orchestrating a massive Ponzi scheme that defrauded investors of a staggering $9.4 million. Let's break down the key highlights of this case. Travis Ford, the founder of Volve Capital, has been sentenced to 5 years in federal prison. The charge: conspiracy to commit wire fraud. This wasn't a small operation. He managed to defraud approximately 2,800 investors. The hook he used was the promise of unbelievable daily returns, ranging from 1% to 2%. To put that into perspective, a 2% daily return, compounded over a year, would equate to an astronomical 547% annual return. On top of the prison sentence, Ford has been ordered to pay over $1 million in forfeiture and more than $170,000 in restitution to his victims. This is a significant move by the authorities to ensure he faces severe financial penalties alongside his jail time. So, let's dig deeper into the details. Travis Ford, a 36-year-old from Glenpool, Oklahoma, received his sentence after pleading guilty back in January of this year to one count of conspiracy to commit wire fraud. This wasn't just a simple mistake, it was a calculated scheme. The official documents confirm that from at least January 2023 until August 2023, Ford and his company, Volve Capital Crypto Trading LLC, were actively soliciting funds from the public. They raised the $9.4 million from those nearly 3,000 investors by painting a picture of guaranteed wealth. How did he do it? Ford positioned himself as the CEO, co-founder, and head trader of Volve Capital. He was the face of the operation. He heavily utilized the company website and various social media platforms to build a persona. He portrayed himself as a highly skilled and successful crypto trader, someone who had unlocked the secrets to consistent, massive profits. The core of his pitch was that irresistible promise: invest with us, and you'll get 1% to 2% back every single day. This is a classic red flag. Anytime you see promises of high, guaranteed, and consistent returns, your alarm bells should be ringing loudly. The crypto market is volatile, and no one can guarantee such results. In fact, court documents revealed a damning admission from Ford himself. He admitted that he never actually believed such consistent returns were possible to achieve. So, what was really happening with the investors' money? Instead of being traded to generate those promised returns, Ford and his co-conspirators were running a classic Ponzi scheme. They used new investors' money to pay returns to earlier investors, creating the illusion of a profitable enterprise. Meanwhile, they were misappropriating and diverting a significant portion of the funds for their own personal benefit. They were living off the money that thousands of hard-working people had entrusted to them, causing immense financial harm and shattering trust. This case is a major win for justice and a significant moment for the crypto community. The prosecution is being handled by trial attorney John J. Leolos from the Justice Department's Fraud Section. The announcement of the sentencing was made by Acting Assistant Attorney Matthew Galati and Inspector in Charge Eric Shen of the U.S. Postal Inspection Service, or USPIS, Criminal Investigations Group, This shows a coordinated effort by federal authorities to actively crack down on fraud within the crypto market. The USPIS is still investigating the case, which is crucial. This suggests that the story might not be over. The phrase co-conspirators was used, meaning other individuals involved in this scheme could still face charges. Authorities are likely looking to bring everyone involved in the Volf Capital scheme to justice. The sentence handed down to Travis Ford is severe, and for good reason. 5 years in federal prison, coupled with substantial monetary forfeiture and restitution, sends a very strong message. It acts as a powerful deterrent to anyone else who might be thinking of exploiting the excitement and complexity of the crypto market to run a scam. It reinforces the fact that federal law enforcement agencies are taking crypto-related crimes very seriously. They will pursue and prosecute those who establish and run Ponzi schemes, preying on investor trust. This brings us to a really important point and a good time for a quick reminder. If you're finding this breakdown valuable and want to stay protected and informed in your crypto journey, please take a second to hit that like button and subscribe if you haven't already. It really helps us create more content like this. And if you have any thoughts or questions about this case, drop them in the comments below. I read every single one and will do my best to respond. Let's create a community where we can learn from these situations together. Now, let's analyze the broader implications. This incident involving Volf Capital is a textbook example of the dangers lurking in the investment world, especially in a relatively new and exciting space like cryptocurrency. Schemes promising unrealistic, guaranteed returns are one of the oldest tricks in the book, but they continue to work because they appeal to our desire for quick and easy financial gains. The legal consequences, as we see with Travis Ford, are severe. We read talking about lengthy prison sentences and crippling financial penalties that can follow you for the rest of your life. So, what are the key takeaways for us as investors or potential investors? First and foremost, be skeptical. If an investment opportunity sounds too good to be true, it almost certainly is. A 547% annual return is not just unrealistic. It's a giant, flashing red flag. Second, do your own research. Don't just rely on a slick website or a charismatic person on social media. Look for independent reviews. Check for registrations with financial authorities and understand the underlying business model. Ask yourself, how are they actually generating these returns? If the answer is vague or overly complex, be very cautious. Third, understand the nature of a Ponzi scheme. They rely on a constant flow of new money to survive. Once that new money dries up, the whole structure collapses, and the vast majority of investors lose everything. The returns paid out are not profits from legitimate investment activity. They are simply funds taken from newer investors. Fourth, this case highlights the increasing effectiveness of law enforcement in the digital asset space. Regulators and investigators are getting smarter and more equipped to track and prosecute crypto-related crimes. The days of the crypto Wild West are slowly but surely coming to an end. This is a positive development for the long-term health and legitimacy of the entire industry. It helps weed out the bad actors and makes the space safer for everyone. This case of Travis Ford and Volf Capital is a painful lesson for the 2,800 people who lost their money, but it's an invaluable one for the rest of us. It underscores the critical importance of education, due diligence, and a healthy dose of skepticism. Our goal on this channel is not just to talk about the wins, but also to analyze the losses and the scams, so we can all become smarter, safer investors. We have to protect our capital, and knowledge is our best shield. As we wrap up today's deep dive, I want to thank you all for tuning in and for your engagement. Remember, the world of cryptocurrency offers incredible opportunities, but it also has its risks. By staying informed and learning from cases like this, we can navigate this exciting landscape more effectively and protect ourselves from those who seek to exploit it. Once again, if you haven't already, please like this video, subscribe to our YouTube channel, and hit that notification bell so you're always the first to know when a new update drops. If you have any questions or want me to cover a specific topic in a future video, let me know in the comments section. I'm always looking for your feedback. Thank you again for watching. My name is Dixon, and I'll catch you in the next video. Let's keep learning and growing together.